In this video, I'm going to demonstrate some journal entries related to cash sales. And to do that, I'm going to use this problem that you see on the screen. You can find a copy of this problem. It's a Word document on Blackboard. And what I suggest that you do is print this off, try it as you watch the video, write it out, and there's also an additional practice problem that you can try on your own once you've watched the video. All right, so we're going to get started here. Spend a Lot, a retail business in the state of Delaware, keeps a $300 change fund in its cash register. Details about the cash receipts for July 30 and July 31st are shown below. So one thing you might notice right away when you read that narrative is that the narrative mentions that this business is located in Delaware. And the reason why that is in there is because what you'll notice when we look at these sales transaction is that there were no sales tax collected, even though it was a retail business. So there are 4 states in the United States that have neither a statewide nor local sales tax: Delaware, Montana, New Hampshire, and Oregon as of the time that this video was created. Alaska also does not have a statewide sales tax, but it does allow local municipalities to charge sales tax. Another detail you might notice when you read this narrative is that the business is setting aside $300 of cash to serve as a change fund in its cash register. So what's going on there is that the business has an employee called a cash register clerk that's going to be given this $300 change fund in their cash drawer, and they're going to be responsible for that cash as well as the cash that the business collects during the course of that employee's shift. At the end of the shift, that employee is going to take a physical count of the cash in the drawer at that time and compare that against the cash register tape to see if there's any overage or shortage. Additionally, another employee, most likely maybe the store manager, will also take a physical count of cash and compare it against the cash register tape to verify the information. These kinds of procedures that we're referring to when we have a single employee assigned to possess that cash during the course of their shift, when we have another employee verifying the count of cash and comparing against the receipts, those procedures are referred to as internal controls. And because cash is the asset that businesses have that is most likely to be easily stolen or lost, there's going to be a lot of internal controls around the receipt and payment of cash that businesses should have in place to prevent those kinds of situations from ever occurring. And on pages 288 and 289 of our book, they give us a list of different procedures that businesses and different controls that a business should have to try to control its cash. So take a close look at those internal control procedures related to cash in the book, and as we work through these problems, think about those. Those are really, really important. Let's get started with these journal entries. On July 30th, the physical count of cash at the end of the day totaled $2,321. According to the cash register tape, cash sales for the day totaled $2,018. All right, so the first thing I'm going to do here is I'm going to compare the physical count of cash against the amount of cash that was in the change fund to begin with. And if we refer real quickly back to the narrative, we can remember that there was a $300 change fund to begin with. So that being said, if we have $2,321 at the end of the shift and we started with $300, if we take the difference between those two amounts, we can see that the business gained $2,021 of cash during the course of the day. So the first thing I'm going to do here is, since the business is gaining cash, cash is an asset, and to increase assets we debit them, I'm going to debit cash. Next, we realize the reason why the business gained cash during the course of the day is because it made sales. And that's what a merchandising company does to make money, is make sales. So we need to increase the business's revenue account. The businesses earn more revenue. And the way that we increase revenue accounts is by crediting them. So that's what we're going to do to our sales account, is credit it. But we are not going to credit it for that same amount that we previously calculated, because the cash register tape is our best information as to the amount of revenue. And it says that the amount of revenue according to the tape was $2,018. So that's how much we're going to increase our sales account by. Now, we know that journal entries must always balance and the debits must always equal the credits. And that is not the case yet for this journal entry. We are short on the credit side. If we take the difference between 2021 and 2018, that gives us a difference of 3. So we need a $3 credit in order for this journal entry to actually balance. And if you think about what's going on with that $3, well, the amount of cash that we gained during the day was 2021, but according to the cash register tape, our cash should have only increased by 2018. So it must have been that when the cash register clerk was giving change, that somehow the clerk ended up with $3 more cash than the tape indicates. And at the end of the day, we can have a shortage or an overage. In this case, we have an overage. Now, overages don't happen very often, and the reason why is because customers are more likely to complain if they're shorted cash, but they're less likely to complain if we give them extra cash when giving them change. But it happened here. So what we need to do to make the journal entry balance is we need to credit an account called cash short or over. This account will be credited when we are over and it will be debited when we are short. This account is classified as either a miscellaneous revenue or a miscellaneous expense. If we're over, it's a miscellaneous revenue, and if we're short, it's a miscellaneous expense. Moving on to our next transaction. On July 31st, the physical count of cash at the end of the day totaled $1,893. According to the cash register tape, cash sales for the day totaled $1,602. So once again, like our last transaction, we need to figure out how much cash the business gained during the course of the day. So we start with that physical count of $1,893. And from that, we subtract the amount of money that was in the change fund at the beginning of the shift, which was $300. So by taking the difference there, we can see that the business gained $1,593 of cash. So since the business is gaining cash, we're going to debit cash to increase it for that amount. And next, we think about the reason why the business gained cash. It's because they made sales, so we need to increase our sales revenue account, and we do that by crediting it, but we don't do it for the same amount again. Rather, we do it for the amount from the cash register tape, which was $1,602. Looking at this journal entry, we can see that it's not in balance. We are short on the debit side, so we need another debit to make the balance. We could take the difference between the $1,602 and the $1,593, and that gives us a difference of $9. So we need a $9 debit. Since debits always come before credits when doing journal entries, I am going to move this credit to sales down one row and show that $9 debit above it. And if we think about what's going on here with that $9 difference, well, according to the cash register tape, we should have gained $1,602 of cash, but when we counted up the cash in the drawer, we only gained $1,593. There is less cash in the drawer than there should be. When that happens, we would say that we are short on our cash. So that is the name of the account we're going to use again, is cash short or over, and in this case we're short. That's why it was debited. That account would be classified as an expense account because we're short. All right, that wraps up this video. Try the problem that's similar on your own and see how you do. If you need help, reach out.